Hey everyone, it's Lawrence Mack here, real estate broker out of Mississauga, and I'm here again with Chris Mulder from Tridac Mortgage. Hey Chris, how you doing?
Very well, Lawrence. Busy day today with the Bank of Canada meeting.
Yeah, for sure. I mean, that's all the news right now. Everyone's like, oh my gosh, the rates are going up. Can you give us an idea what's going on?
I wish I knew all the answers as to what's going on, but what I can tell you that of what we know today is that the Bank of Canada increased the prime rate by 1/4%.
Mhm.
And this really should not surprise anyone because the bank has been forecasting this for quite some time. And I think, that rising rates is not popular. That's like increasing taxes, it's it's not a good thing, right?
Sure.
In general. But overall, I think from a macro level, it is a good thing because you have to understand we are coming from an extraordinary event, which was the pandemic. Rates had to be dropped in quick succession to support the Canadian economy. The Bank of Canada almost lowered the rate to zero. It was 0.25% was the overnight lending rate. That's the policy rate. Now it's gone up to 0.5%. And that really is a positive because it means that we've recovered and can start to put the pandemic in the rearview mirror.
Sounds good. Because I've been getting some calls and inquiries from both buyers and sellers. Like, what does it mean for them? We have sellers that want to list either now or maybe wait, and they're just like, does this affect the number of people that can buy? And then a bunch of buyers that are concerned about that. So tell me, how does it affect somebody, I guess, with the pre-approval already, if they're trying to buy?
So that's a really good question. So the short answer is it will not affect anyone who is currently pre-approved. If you are pre-approved for a 5-year fixed rate, then that rate should be locked in for you for a 120-day period. So today's announcement is just relating to the prime rate. Okay. If you are pre-qualified or pre-approved for a variable rate mortgage, what has been negotiated for you is not an interest rate, but rather a formula of prime minus a certain factor. So the formula will remain intact. What has changed is the prime rate will be 1/4% higher, but that was always built into that decision to be opting for a variable rate mortgage in the first place.
Right. And based on my very quick calculation on a $100,000 mortgage, a quarter percentage would be like maybe an extra $15 a month or something. Do you have an idea about how much more it would be for someone?
Yeah, I agree with that. I mean, I did a quick calculation as well. Yeah. I'm seeing about $11. So between 11 and 15, it depends on what your actual current rate is, right? But a 1/4% increase is about $11 per 100,000. So if it's $1 million mortgage, that's $110 increase per month.
And that's just a payment. That's not even interest. It's just
that's
like
correct.
Actually, you're paying, some of which is your own money, some of which goes to the bank.
That's right. So I mean, it sounds like a lot on $1 million, but you have to keep in mind that's $1 million mortgage, right? So everybody's unique circumstances are going to be different. It's probably not going to make a material difference for most households. However, this rate change today is one of what we expect to be many as the Bank of Canada attempts to manage inflation. And so, how many rate increases is what is being debated right now. My personal opinion is that we should see probably 3 to 4/4% increases, bringing the total prime rate up by 1% from what it was prior to the announcement this morning. So what is that? That works out to $40 per 100,000, $45 per 100,000 over the next year.
Right. And the actual increase in the rate, that doesn't affect the pre-approvals because we're already using a stress test. Is that correct?
Correct. So the stress test is determined by the Bank of Canada. It's called the Bank of Canada qualifying rate. And that rate is determined by an averaging of the posted 5-year fixed rates. And as of yet, there has been no change announced to that qualifying rate. So the only thing that will materially change what households or borrowers qualify for are changes to that qualifying rate. So it's interesting because we panic about rising rates, but there's rates are so fragmented. We have to talk about specifically what do we mean, what rate are we talking about, right? And what impact that is going to have on the market.
Okay, so it sounds like anyone who has an issue about their pre-qualified, pre-approval, they should probably go talk to the mortgage person to see if it affects them. And probably the answer is probably not, but they should always talk with the mortgage person.
Yeah. I mean, over the long term, it will for sure. But as it stands today, if you are shopping, it shouldn't have an impact. And assuming you are fortunate enough to have an offer accepted within your pre-qualification period, it shouldn't have an impact on you.
Okay, so hopefully that assuages a lot of people's fears, both the buyers and the sellers, about what's going on. So I think that's very good. Chris, how can people reach you if they have any questions?
I can be reached phone 416-732-8020, or they can book a call with me directly via my calendar, which is found on my website. That's tridacmortgage.com. I'm sure you can include a link somewhere, but tridacmortgage.com. The door is always open to anybody who has any questions or concerns about today's announcement.
Thanks, everyone. I'm Lawrence Mack, real estate broker out of Mississauga. We'll talk to you soon. Bye.